Welcome, everybody. January 8th, the market update desk with Scott Riley, NMLS number 157524. Lots to go over today. Yesterday, we got the JOLTS report, job opening and labor turnover survey. So a little bit of a surprise. We saw that job openings came in at 8.09 million versus a forecast of 7.89 million. So we're seeing more jobs available that might be. Now, keep in mind, we get these differences between JOLTS and ADP and BLS. Might be telling us that the labor market is cooling. That's what the traders are starting to extrapolate from this information. On the flip side, we saw the ISM services index increase to 54.1 from 54.3. The forecast was 52.1. So we had stronger than expected manufacturing. Then we saw what really the bond traders didn't like was the ISM services prices, the cost of things, jump from 64 point up to 64.4 from 58.2. Now the forecast was 57.5 index. So these are big. That's a big group of numbers that it went to the high side. And that brought us to the bond market yesterday to the 10-year was about 4.64, which is not a good sign. We keep going up in the bond market. But with those prices paid index increasing more than expected, that has inflationary overtones to it. Now yesterday we also had the 10-year bond auction. Kind of was, I'd say neutral. It wasn't great, wasn't terrible. Didn't really help the bond market at all. There was a lot of supply that came out yesterday. So today we got the ADP payroll report, a little weaker than expected. So it showed that seasonally adjusted 122,000 jobs. Now that's down from the previous month of 146 and less than the market forecast of 136,000. Now, one thing that the bond traders may like today is that wages pay grew at a rate of 4.6% from a year ago. That's actually the slowest pace since July of 21. So the wage component may actually help us out. We also got the unemployment numbers for the day. It actually came a day early. So it showed initial claims were 201,000. Well below the estimates, 215,000, and the lowest level since February 24. Now, report, like I said, that came a little bit early because we get the BLS report on Friday. Now, when we look deeper into the ADP, into the market segment of what created jobs, we saw that health services category added 57,000 jobs, and construction 27,000. Leisure and hospitality, which has been this big linchpin of the job growth, added 22,000. Now, interestingly, financial services grew by 12,000. I can tell you from a mortgage lender standpoint, we had a tremendous drop of licensed loan officers not renew at the end of December. So several sectors came in at a negative. We saw manufacturing drop 11,000 jobs and resource mining 6,000. Professional and business services dropped 5,000. Now, we've shown this before. Almost exclusively, all the jobs came from large companies of 500 or more workers. They accounted for 97,000 of the 122,000 jobs. It's showing us that we have this diverted job situation going on. Small businesses are continuing to struggle. Large businesses are able to get through this time period and start to add jobs. So we've got a lot waiting on this Friday jobs report. So we're going to wait anxiously, see what that looks like. Senior analyst Mr. Gibson will be all over it. He is out hanging out on the deck right now, enjoying the cold weather on all the fur that he has. And maybe we'll get a special report from him on Friday. We'll see how he feels. We hope you find this valuable and informative. We'll keep giving you all the news for the day. The market update desk, 616-293-2189. your original singular market news source for West Michigan. Have a tremendous afternoon.